Ladies and gentlemen, Asian guy here. When people talk about silver, they always talk about 1 year, one number, 1980. It is the ghost that haunts the market. It is the benchmark of insanity. It is the story of two Texas billionaires, Nelson and William Hunt, who tried to buy all the silver in the world. They drove the price from $6 to $50. They created a mania, and then they were destroyed. The government stepped in, changed the rules, and crushed them. For 45 years, the lesson of 1980 has been, don't fight the Fed, don't fight the banks. You cannot corner the market because they will change the rules. This fear has kept silver investors in check. It has kept the price suppressed. But today, I am here to tell you that the ghost of 1980 is dead. The situation we are facing in 2026 is not a repeat of 1980. It is the inverse of 1980. It is the anti-1980. And that is why it is infinitely more dangerous. That is why the coming squeeze will make the Hunt brothers look like a lemonade stand. In 1980, the corner was attempted by outsiders. The Hunt brothers were oil men. They were rich, but they were not the establishment. They were fighting against the banks. They were fighting against the COMEX. They were fighting against the Federal Reserve. When you fight the House wins. The COMEX board of directors simply held an emergency meeting and said, rule change. You can only sell. Buying is illegal for the Hunts. Boom. Price crash, margin call, bankruptcy. The establishment protected itself from the outsiders. But look at 2026. Who is cornering the market today? Is it a couple of cowboys from Texas? No, it is JP Morgan. It is Citibank. It is the Chinese government. It is Samsung. It is the insiders. This is the critical difference. This is the detail that changes history. The entities squeezing the market today are the same entities that write the rules. JP Morgan sits on the board of the COMEX. JP Morgan is the custodian for the silver ETFs. JP Morgan is the primary dealer for the Federal Reserve. Do you think the COMEX is going to change the rules to bankrupt JP Morgan? Do you think the Fed is going to intervene to stop a squeeze that benefits the U.S. banking system? Absolutely not. The establishment is now on the side of the squeeze. This means there is no circuit breaker. In 1980, the government was the brake. In 2026, the government, or its proxy banks, is the accelerator. There is no one left to stop the price from going to infinity. The referee has joined the team that is winning. And let's look at the fundamental setup. In 1980, there was a surplus of silver. The Hunts were buying excess inventory. There were massive stockpiles of government silver. The U.S. Treasury had billions of ounces. When the price got too high, people melted down their silverware. There was plenty of metal. It was just being hoarded. In 2026, there is a deficit. We have burned through the stockpiles. The U.S. Treasury has zero silver. The COMEX has 30 million ounces and shrinking. We are running a 200 million ounce annual deficit due to solar and industrial demand. In 1980, the squeeze was financial. It was paper leverage. In 2026, the squeeze is industrial. It is physical famine. You can kill a financial squeeze by changing margin rules. You cannot kill an industrial squeeze by changing rules. Samsung needs the metal to build phones. Changing the margin requirement doesn't create more silver for the factory. This squeeze is worse than 1980 because it is structural, not speculative. Speculation is fragile. Structure is concrete. The Hunt brothers were leveraged to the eyeballs. They borrowed money to buy silver. When the price dropped, they got a margin call. The current buyers, the central banks, the sovereign wealth funds, the tech giants, are paying cash. They have no margin debt. You cannot margin call the People's Bank of China. You cannot margin call Apple. They are strong hands. So we have strong hands versus weak hands, the foreign shorts. We have insiders versus outsiders. We have physical deficit versus physical surplus. Every single variable that caused the 1980 squeeze to fail has been reversed. Every single variable now points to a squeeze that succeeds. And the magnitude? In 1980, the global money supply was tiny compared to today. M2 money supply in the US was roughly 1.5 trillion. Today, it is over $21 trillion. If we adjust the $50 peak of 1980 for true inflation, shadow stats, the price should be $600 or $800. But because this squeeze is institutionally sanctioned, it could go even higher. The banks want to recapitalize their balance sheets. They want silver to be expensive. This is the institutional corner. It is the most powerful force in markets. When the monopolists decide to raise the price rises. We saw it with Standard Oil. We saw it with De Beers and diamonds. Now we are seeing it with the banks and silver. They suppressed it for 40 years to accumulate it. Now that they own it, they are going to reprice it. The suppression phase is over. The markup phase has begun. So forget the ghosts of the Hunts. They were amateurs. We are watching the professionals work. And the professionals don't lose. The 2026 squeeze isn't a rebellion. It's a coup. And the coup is complete. We established that the insiders are running the squeeze. Now let's talk about regulatory capture. This is the concept that the agencies regulating an industry are actually controlled by the companies they are supposed to regulate. In the silver market, the CFTC, Commodity Futures Trading Commission, is effectively a branch office of the big banks. In 1980, the regulators were somewhat independent. They panicked. They acted to save the market stability. In 2026, the regulators are silent. Why? Because the stability of the U.S. banking system now depends on the price of silver going up. Remember the unrealized losses on bank balance sheets, the trillions in bond losses? The only way to offset those losses is to have the other assets on the balance sheet, gold and silver, explode in value. The Federal Reserve and the Treasury likely gave the green light to JP Morgan. Go ahead, squeeze the silver. We need the inflation. We need the asset appreciation. This means that if the price goes to $100, $200, $500, the CFTC will not intervene. They will say, it's free market forces. It's supply and demand. They will gaslight the public while the banks loot the system. This brings us to the bail-in. In 2008, we had bailouts. Taxpayer money was given to banks. It was unpopular. In the next crisis, 2026, they will use bail-ins. This means they take the depositor's money to save the bank. But how does this relate to silver? If you have a paper silver account, unallocated, at a bank, you are an unsecured creditor. When the bank gets in trouble, maybe from a derivative blow-up in another sector, they can legally seize your paper silver and convert it to bank equity, worthless stock. The institutional squeeze is designed to force this conversion. By driving the physical price to the moon, they make the paper liabilities toxic. They force the paper holders to be bailed in or cash settled at a low price, while the bank keeps the physical metal at the high price. It is a wealth transfer mechanism. They are separating the paper holders from the physical reality. In 1980, the Hunt brothers actually took delivery. They flew metal to Switzerland. They physically removed it from the system. In 2026, the banks are re-fencing the metal. They are moving it from the registered vaults, public, to the eligible-ish private vaults, their own. They are taking delivery from themselves. This creates a closed loop. The metal never leaves the bank's control, but the ownership title shifts from the public to the bank. And unlike 1980, the global financial system is infinitely more fragile. In 1980, U.S. debt to GDP was 30%. The U.S. was a creditor nation. Interest rates could be raised to 20% to stop inflation, the Volcker shock. In 2026, U.S. debt to GDP is 125%. We are a debtor nation. We cannot raise rates to 20%. If we did, the interest on the debt would be $7 trillion a year. The U.S. government would default instantly. So the Volcker solution is off the table. The government cannot stop the silver squeeze by raising rates and crushing inflation. They must let inflation run. They must let the dollar devalue. This removes the only weapon that stopped gold and silver in 1980. Without the interest rate weapon, the dollar has no defense. Silver has no ceiling. This is why I say it will bankrupt the system. The 1980 squeeze bankrupted a few brokerage houses and the Hunts. It was a localized event. The 2026 squeeze hits a system that is leveraged 100.1 globally. The derivatives market, which didn't exist in 1980 in this size, connects everything. A silver squeeze triggers a bond market crash, which triggers a currency crisis, which triggers a sovereign debt default. It is the first domino in the everything bubble. The system is based on the confidence that the dollar is stable. $100 silver proves the dollar is unstable. Once that confidence breaks, the $100 trillion global bond market searches for a new home. Even if 0.1% of that money tries to buy silver, the price goes to 4 digits. The regulators know this. They are terrified. But they are trapped. They can't stop the squeeze without crashing the banks, who are long. They can't let the squeeze run without crashing the dollar. They have chosen to save the banks. They have chosen to sacrifice the dollar. And that means they have chosen 100 plus its silver. The 1980 playbook is useless. You cannot analyze this market using 1980 logic. Oh, the government will confiscate it. Why would they confiscate it when JP Morgan already owns it? The government is JP Morgan. They don't need to take it from you, the small stacker. You are irrelevant to them. They need to take it from the foreign central banks and the industry. And they are doing that via the price mechanism. The institutional sanction is the key. When the mob boss decides to rob the casino, the security guards look the other way. We are watching a robbery in progress. But for the first time, the stackers are standing next to the mob boss, holding the same bag. We are accidental accomplices to the greatest heist in history. The payout is going to be legendary. In 1980, the world was analog. We didn't have the internet. We didn't have cell phones. We didn't have solar farms. Silver was used for photography, Kodak, and silverware. When the price hit $50, people stopped taking pictures. They switched to digital, eventually. They melted grandma's tea set. Demand was elastic. High prices killed demand. In 2026, the world is digital. Digital means silver. You cannot stop building solar panels. It is a government mandate. You cannot stop building EVs. It is a government mandate. You cannot stop building missiles. It is a geopolitical necessity. Demand is inelastic. High prices do not kill demand. This is the fundamental difference that makes 2026 worse than 1980. In 1980, the market balanced itself. In 2026, the market cannot balance itself via price. The price goes up, but consumption continues. This leads to physical depletion. It leads to a world with zero silver available. And where is the buffer stock? In 1980, the U.S. strategic stockpile had huge reserves. They could dump silver to cool the market. Today, the U.S. strategic stockpile has zero silver. None. We sold it all. China has a stockpile, but they aren't selling. They are buying. JP Morgan has a stockpile, but they are the ones squeezing. So there is no dam to open to flood the market and lower prices. The river is dry. The only new supply comes from mining. And as we discussed, mining takes 10 years to ramp up. We are facing a supply cliff with no parachute. Imagine the panic in the boardrooms of Apple, Samsung, and Raytheon. In 1980, Kodak was annoyed. In 2026, Samsung is terrified. Without silver, their company value goes to zero. This creates panic hoarding. In 1980, the public hoarded coins. In 2026, the corporations hoard industrial bars. A corporation has deeper pockets than the public. When Apple decides to hoard, they can buy $1 billion worth in a second. This corporate FOMO, fear of missing out, will drive the price faster and harder than the Hunt brothers ever could. And consider the just-in-time delivery system. The global supply chain is fragile. It relies on smooth flows. A silver squeeze disrupts the flow. Refineries get backlogged. Shipping gets insured at higher rates. Friction increases. This causes double ordering. Companies order 2x what they need because they are afraid of shortages. This artificial demand amplifies the squeeze. It creates a feedback loop of scarcity. The 1980 squeeze was a money event. The 2026 squeeze is a supply chain event. Money events are solvable. Print money, change rules. Supply chain events are not solvable by politicians. You cannot legislate more silver into existence. This is why the system will bankrupt. The system assumes infinite resources. It assumes that at the right price, resources appear. But we have hit the planetary limit for cheap silver. The easy silver is gone. We are mining deeper, lower grades, in riskier jurisdictions. The energy return on energy invested, ROAI, for silver mining is collapsing. It costs more energy to get the metal. The 2026 squeeze exposes the lie of infinite growth on a finite planet. It forces a repricing of everything based on resource reality. When silver goes to $100, copper will follow, oil will follow, food will follow. It is the commodity supercycle that breaks the back of the debt system. The Hunt brothers were playing checkers. They tried to corner one commodity. The banks and the industry in 2026 are playing 4D chess. They are fighting for the building blocks of the future economy. The stakes are survival. When survival is on the line, there is no ceiling. The bankruptcy of the system comes when the derivatives explode. Trillions in derivatives are tied to interest rates and currencies, but those rates and currencies are tied to inflation, and inflation is tied to commodities. When silver breaks the suppression, it signals hyperinflation is here. Bond yields spike. The government cannot pay the interest. The system defaults. It all starts with silver. It is the small gear that turns the medium gear, gold, which turns the big gear, bonds. The Hunt brothers spun the small gear for a few months. The 2026 squeeze will spin the small gear until it melts, destroying the entire machine. We are witnessing the end of the paper age and the return to the hard age. 1980 was a warning shot. 2026 is the invasion. So, we know it's worse than 1980. We know the institutions are behind it. We know the industrial panic is real. Where does that leave you? The sovereign individual, the stacker, the little guy. In 1980, the little guy got hurt. People bought at the top, $50, and held it all the way down to $4. They lost their savings. Why? Because they were betting with the Hunts against the establishment. When the establishment crushed the Hunts, the little guy got crushed too. In 2026, the dynamic is different. If you're stacking now, you're betting with the establishment, JP Morgan insiders, against the old system, paper dollar, foreign banks. You are riding the coattails of the giant. As long as you don't use leverage, as long as you hold physical, you are aligned with the winners. But there is a danger. The danger is that the system will try to close the gate before you can exit. In 1980, you could sell your silver easily. In 2026, with CBDCs, central bank digital currencies coming, they might try to make it hard to convert silver back into spendable currency without flagging you. They might implement windfall profit taxes. Oh, you made 500% on silver? We are taking 80% of it to pay down the national debt. This is why the exit strategy, ratio trade into gold land, is so important. You need to move the wealth out of the spotlight. The squeeze will be so violent that it will attract government attention, not to stop the price because the banks want it high, but to tax the profit. However, the sheer scale of the bankruptcy of the system might make taxation irrelevant. If the dollar collapses, paying a 50% tax in worthless dollars doesn't matter. What matters is that you hold the asset that survives. The 1980 squeeze was a spectacle. It was on the news every night. The 2026 squeeze will be a crisis. It will be framed as a national security issue. We need silver for missiles. Hoarders are traitors. Expect this narrative. But remember, JP Morgan is the biggest hoarder. They won't confiscate from themselves. So as long as you hold what the banks hold, you are relatively safe. The bankruptcy of the system means the end of the trust economy. Trust in the Fed, trust in the COMEX, trust in the dollar. It is replaced by the verification economy. Verify the metal, verify the weight, verify the ownership. 1980 was a failed revolution. 2026 is a successful regime change. The regime of paper is being overthrown by the regime of hard assets. The volatility will be stomach-churning. We might see silver go $30, $50, $40, $80, $60, or $150. The swings will wash out the leverage, but the destination is higher. The conclusion is clear. This is not a trade. It is a paradigm shift. The Hunt brothers were trying to make money. The 2026 players are trying to survive the collapse of money. The motivation is different. The players are different. The supply is different. And the result will be different. Instead of a crash back to $5, we will see a revaluation to a permanently higher plateau. Maybe that plateau is $100, maybe $300, but $30 silver is gone forever. The era of cheap energy and cheap resources is over. The era of financial engineering masking physical reality is over. The 2026 silver squeeze is the pin that pops the $300 trillion global bubble. It is the event that historians will write about for 100 years. The moment the world remembered that money must be scarce. You are living through history. Don't trade it like a stock. Hold it like a legacy. The system is bankrupt. The check is in the mail, and it's going to bounce. But your silver will never bounce. I'm Asian Guy. The ghost of 1980 has faded. The monster of 2026 is here. I'll see you in the new world.